TECH WABAG has come out with the earnings and we are going to be focusing on that one. Mr. Skandaprasad Seetharaman, who is the CFO of TECH WABAG, is joining in now to share with us his views on the kind of earnings that the company has posted, to decode the earnings for us, as well as share an outlook going forward from here as well. Mr. Seetharaman, good to have you with us on Business Today Television. You had started off this entire fiscal year with a strong note, with a strong Q1. How have you analyzed Q2 for you, how it is panned out on various parameters? What do you think has been the key driving factor behind the earnings that you posted this time, sir?
Thank you. Good morning, Sakshi. Good morning to your viewers. Thank you for having us on your show. Our mantra has been profitable growth backed by cash, and this quarter was no exception. We delivered a 18% top line with a 20% PAT growth, a growth of PAT higher than sales. We closed with a net cash positive position of over 675 crores. And we have a very, very good mix in line with our strategy, where almost 50% of the business comes from outside India, and that way cements our position as a global major. We have always said that our focus more and more will be outside India, overseas projects, industrial projects, advanced technology projects. Today, our top 5 orders in the order book are either in desalination or in advanced technology sewage treatment projects. So that way it's panned out very well. On the margin front, we remain strong in line with our guidance of 13 to 15% band of EBITDA, and we delivered over 15% of ROE, continuing with the strength from the last quarter and year. So in summary, it was a quarter that delivered on what we had promised: a 13 to 15% EBITDA, cash positive, 15% ROE, and closing with 11th consecutive quarter where we have remained cash positive. And this is the 6th consecutive year where we are net cash positive. So that way it's been a sufficiently satisfying quarter for us.
Absolutely. I wanted to ask you, as far as the order flows are concerned, Mr. Seetharaman, where are you at by the end of the first half this quarter? What was the kind of order flows that you have already received? And if you could also share with us in the same breath an outlook for the entire fiscal year, how are you expecting the order flows to pan out?
Sakshi, we have guided the investors with a 3x of our revenues to remain in our order book. And we are today much better than 3x as we speak. In the first half, we have already booked orders of close to 3,500 crores. We are a preferred bidder in orders of over 3,000 crores. So even with the 15 to 20% growth in the top line, which we have guided, you can see that our order book will be well above 16,000 crores by the end of the year, which is in line with our target. And what is going to drive that is primarily going to be the Middle East and Africa market, which we have repeatedly said has been our growth engine and will be our growth engine for the future. Even in the first half of the year, we received a large $272 million project of Yanbu desalination. Last year, we declared a $370 million consortium order at Al Hayar, which was a sewage treatment plant. So such large marquee orders are what is already in the bag, and we see much more coming through. Some of these in the preferred bidder state, some of which are under bidding and evaluation. So from an outlook perspective, it's a very robust pipeline, and we are very, very confident of continuing to perform and meet the expectations that we have set for us, the guidance that we have given in line to the investors.
So highlight for us the kind of growth that we can now foresee for you by the end of the fiscal year on both the top line as well as on the margins front as well. You have so far maintained a 15 to 20% kind of a growth path on the top line in the medium term. Are you sticking to that? Are there any visible signs that this guidance could also be upped going forward? Also on the margins front, sir, would you be sticking to that same guideline, or are there also levers to improve that margin going forward?
I think one of the important levers of margin improvement has been the increase in O&M that we have stated. So the O&M business is a cash heavy in terms of generation of cash, asset light, very annuity business, predictable business. This is something which we are focusing on. Higher industrial, higher international will also drive up the margin. So there are enough levers to drive the margin up and maintain it in the 13 to 15 band. And the volumes will come out of large marquee projects. So we are confident of the 15 to 20% band that we have given in terms of growth. But yes, seeing the market and also the sector, this is one sector where you have more tailwinds. So the tailwinds will surely, in our opinion, help us deliver these growth targets surely. And of course, there is always an opportunity for upside, which we will keep targeting. And we are hopeful that that kind of appreciation for water keeps going up, which will also bring more business and more sustainability.
Absolutely. Mr. Seetharaman, also wanted to understand from you when it comes to the new age sectors, say for instance data centers, semiconductors, there's so much of government's focus as well as the industry focus on diversifying, expanding into these areas as well. What kind of opportunities does this really bring out for a player like you? Are you already seeing a demand uptick for clean water for such industries, and what is the kind of opportunity you are already penciling in over the next 3 to 5 years from there?
A wonderful question. Thank you for asking that. Yes, water is a social subject, but it is as much an economic subject. So we call this the future energy solution sector, which involves solar, hydrogen, compressed biogas, data centers, and semiconductors. So this is the play that we have been focusing on for the future. And I'm happy to let you know that we have already secured orders both in the solar sector for ultra pure water, and our first project on the bio-CNG, which is also the compressed biogas. So we have already kick-started and got these breakthroughs, and we will continue to build on this. This is a more decadal view for water that you'll have to take on the future energy solutions. While the mainstay will remain the social sewage treatment, desalination, effluent treatment for industries, but it is also important that economically some of these future energy solution sectors where the water demand and reliable, affordable 24/7 water, specifically for the growth that we are envisaging and the government backing that we are seeing, this is going to be a huge sector from a water perspective, and who better than us from a 100-year legacy with the experience that we have to tap this. We have a department which focuses specifically on this, which is the Special Initiatives Department, where these 4 sectors are targeted. We are already, as I said, into the order intake phase, where we have seen 2-3 orders already in the bag. We are already bidding for 2 or 3 more tenders, and this is going to be the more 3, 5, 10-year growth engine, along with the international engine, which will continue to go ahead. This is going to be an important component, more from a technology perspective and contributing economically to the world.
Thank you so much, Mr. Seetharaman, then for sharing with us all these highlights. I wish you all the very best for the upcoming quarters as well. And of course, we will have more opportunities to, of course, speak in a detailed fashion about your company, your vision, of course, all the levers and the drivers that you're focusing on as well. All the very best to you. Thank you so much for your time.
Thank you, Sakshi.